highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyn.org. CFA Society Nigeria, making finance a force for good.
Money Talks. Money Talks.
Money Talks. Money Talks. Money Talks with CFA Society Nigeria. Let's talk about money. Hello everyone and welcome to Money Talks. Money Talks is brought to you by CFA Society Nigeria and it's a financial literacy program. Today on the program we have Femi Ademola, CFA. Femi is a group executive director with Cordros Capital Limited, a financial services company based in Lagos, Nigeria. Femi is responsible for origination and execution of advisory and capital raising deals such as debt and equity capital, merger and acquisitions, structured operation and financing, etc. He is a finance and investment professional of over 20 years standing, covering audit and financial advisory, investment banking, credit analysis, and risk management, relationship management, investment management, and research, economic and financial analysis. Femi is a graduate of accounting and finance and a fellow of the Institute of Chartered Accountants of Nigeria, FCA. He has an MBA from the Lagos Business School, a master's degree in actuarial science, University of Ibadan, and an MSc Finance Economic Policy from the School of Oriental and African Studies, University of London. He is also a CFA charter holder and an associate of the Chartered Institute of Stockbrokers, CIS. Let's make welcome Femi to the studio this evening. Femi, good evening to you and welcome to Money Talks.
Thank you very much. Good evening.
Good to have you.
Yeah, same here.
We'll be discussing this evening savings and investing basics. That's what we're talking about this evening with Femi. So stick around, stay close to your radio. You might just want to call a friend that you know that you like and tell them to tune their radio dial. We're 92.3 Inspiration FM. We're live here this evening and together with Femi Ademola, we're looking at savings and investing basics. The number to call us here will be 0700 923 923 923. That's 0700 923 923 923. You can also join live on Instagram at Captain Smart 007. That's what we're broadcasting live on Instagram at Captain Smart 007. You can also send your questions or your contributions via the platform or send us a WhatsApp message 0817 313 6193. So Femi, let's get this conversation started. When we say savings and investing, these are terms that are sometimes people use them interchangeably. They substitute one for the other. Right. Can you just help us explain the terms here and highlight any similarities and differences between the two of them?
Thank you very much, Campus Snap. Pleased to be here and to be speaking to my fellow countrymen about the basics of savings and investment. When we hear savings and investments, you're quite right that most of the time you use them interchangeably. Yes, they have similarities, but at the same time there are differences as well. In terms of similarities, what happened is that both of them involve setting money aside, as in putting it somewhere for rainy days, something you need to use in the future. Now, I guess that's mostly basic what you see when it comes to similarities. Now, when you talk about the putting money aside for the future, the question is, how long are we talking about when it comes to future? If it is near term, then it is savings. But if it could be longer, medium to longer term, then call it investment. And again, apart from the time horizon, then it's about needs again. When you put savings aside, most of the time you need it for a specific purpose. You just want to set it aside, and then, you know what, when it's time for me to put it out, I use it for this particular purpose. But the investment is more about potential to grow in future for whatever use I can need it for in the future. You know, in basic economics and commerce, they taught us something they called motive for keeping money. One of them is transactionary, which is basic meeting of needs you have on small businesses. And then you have precautionary, which is setting it aside for me to be able to use to care for something immediately. Maybe you fall sick, you need to buy medication or go to the hospital. That is savings. And when it comes to the idea of speculative motive, then you have that position of investing. And those are the differences and similarities of both of those two things.
Wow, very explanatory right there. So from this explanation you have given now, I want you to help us to categorize, you know, like a person that has excess cash. I mean, like they say, too much money in local balance, you know. And maybe he goes there, he buys bags of millet when millet is in season, or maybe any other commodity or farm produce when it's in season, and then he stores them. And then when it is out of season and the demand is high, he decides to sell them. Can you help us to put those people in categories now?
You didn't have that for profit. Yes. I mean, that's a very good, explanation. I mean, it's a very good analogy. Sorry, because, like I said earlier, when I was trying to differentiate both of them, I mentioned the fact that savings is usually when you save it aside for a particular need. Yeah. For you want to take care of this and everything. But if it is something that, let me use it for this purpose, yield something, maybe preserve my capital, just get some return, then this investment. This analogy, to me, look like more like an investment. And I'll explain why. In the first instance, the person doesn't need that millet that is buying, the bigger millet. So he's not particularly keeping it for himself. He's using it for the potential of selling in future.
It's not for consumption.
It's not for consumption.
Yeah.
It's not for whatever, gifts or whatever. It's more about, I'm using it to keep now, to buy now for keep because it's cheap, and sell it when it's expensive to make gains. So that looks like an investment. Now, there might be, and that's the difference again about savings and investment, about the fact that you cannot predict the future of the investment. Up, down, or flat. You may expect that, during the planting season, the millet will be expensive in a way. Well, a lot of people have kept it. And then they probably put it at the same time, and then you get into a glut. At that time, you'll be like, let me just even make my money. It's not bad. So, to me, this analogy fits more with investment rather than savings.
So they're just trying to speculate on the price.
Yes, that word is good. I can use that. Yeah.
Okay. So apart from that one, what type of other avenues are available for those who may be wanting to do savings and investment?
Yeah. So I mean, in savings, like I said, you put cash aside. When you want to save, you can do it in so many ways. But the only thing you don't want to do is to bury it or put it in a piggy box in the house where it doesn't yield anything. So you want to put it in a financial institution. Now, I didn't say a bank, I said financial institution where the money can generate something because it's savings for a particular purpose. It can be target savings. I want to buy a car in the next 6 months, and the car I know that is going for like 6 million naira. So if I put 1 million naira aside, I can get to that. But of course, price might move a little bit as well. So let me earn something on it that can make me closer to my target. Therefore, you keep it in the bank savings. You can put it in a mutual fund. In mutual fund, what basically people don't understand is that when you collect money together, you have a better bargaining power that you can use to get something more. If I go to a bank with my 1 million naira, they probably give me 1% or 2% rate. But if 20 of us put money together to write 20 million, they probably give me another 1% or 2% more, which we can all share to get something better. So that collective investments can make it a more reasonable way to save, which you can do through mutual funds. So if you do mutual fund, that makes sense, right? You can buy bonds that you can put money in as investment. So before we're explaining savings, that one, the most important thing is safety of my principal and get something on top of it. So you'll be looking for safe investment, placement in a bank, buy a mutual fund, usually those money market funds that basically invest in short-term and very safe. The most important thing they do is they preserve your principal. The return might not be fantastic, but at least you are certain of your principal. Now, you can do bonds that are more long-term, fixed rate. Some of them you are locking there. there for investment, and then I know that in 5 years, this is what I'm going to get as principal, and I'm happy with it. In fact, some of them will pay you some little, coupon along the line that you can use to take care of your immediate need. Right? Nowadays, Nigeria, commercial paper become very popular. They are short-term corporate, instrument where corporate used to raise money, like treasury bill for government. This for corporate. You can put money in it. It gives you something that can earn money on it. You can even buy commodities. The bag of millet you explained is an investment. It just look crude, but it happened. We now have commodity exchanges here where you can buy stuff and sell. Beforehand, it's more about industry buying from the farmers. So they already set up the contract. Give me over the next 3 months or next 6 months because what I need it for my production. But now we finance guys, we created papers around them that we can trade in them, and that's what we call the commodity futures and all sorts that we can, or derivatives as commodity. So you can do that as investment as well and saving. So those are different ways in which you can save. There's so many other things. Some people do art to save. I mean, you buy art, keep them, the value increase and stuff like that. Gold.
Yeah.
I mean, depending on the size of money that you have. So you can try all those kind of, precious metals and then, that kind of thing. So yeah, it's quite a lot of things I can do. That's investment. Yeah.
Thank you very much. In case you're just joining us now, it's Money Talks, and it's brought to you by CFA Society Nigeria. Femi Ademola is here with us, and we're discussing savings and investing basics. In case you have questions or contributions, please do send us a message. 0817-313-6193. That's on WhatsApp. You can also record a voice note and send to us to that number, or you can just call us on the telephone 0700 923 923 923. That's 0700 923 923 923. And those of you on Instagram, you can also send us a message on the live stream there, and Femi will be answering your questions or giving clarifications on the topic we're discussing this evening: savings and investing basics. So Femi, somebody out there, since we're talking about savings and investing basics, somebody will be saying, at what period in one's life can one begin to talk about, okay, this is the time for me to begin to save or invest? And if they are ready to do that, how do they begin to go about it?
Thank you very much. Very nice question. A lot of us just think that there's a specific time. I have to wait for this to happen before this happens. But I don't think so when it comes to saving and investment. It starts the day you are born, in a way. Yes, for some, you are not able to do it yourself. So your parents or family have to start it for you, because that's the basic things nowadays, because of the value of money and everything. So as you are getting something, you can start putting it. I mean, all of us, when we are babies, or when we are children, we have all those piggy boxes where we put some little things that they give to us and save them there. Some of them even pocket money for school, keep part of them there. And then when it is full at Christmas, you break it up to use it to buy stuff for yourself. That's the basic things about savings, just trying to put things in the value. But now let's say about you want to get a little bit more sophisticated in yourself and start doing stuff yourself. You should start immediately. You start earning money, maybe after school. And I'll explain that, in every investor life, there's life cycle that we have. And the life cycle, let's just say, you start immediately after graduating from school at 22. I start. Immediately, for those that have good head start, where you are not bombarded with expenses and issues, immediately you leave school, you can start keeping money aside immediately. Start putting something like that. And the longer period you have, the more you're able to put those money aside for a very long time. And so no matter how little they are, set something aside for investment. It helps you. And part of what they taught us in CFA is that the younger you are, the more you are able to take risk. Because when you put those investments, you can't guarantee that what's going to happen in the future. Just like you don't know whether you're going to wake up tomorrow.
Yeah.
Anything could happen to the investment. But even if anything happened to it.
Hello, good evening, sir.
Okay, Femi, just hold on. Good evening to you.
Yeah, I hope you can hear me clearly.
Yes, we can. Tell us your name and where you're listening from. Welcome.
Okay, so Mr. Femi, good evening.
Good evening.
Yes, I wanted to help me out with something. In the case of now that we're having rising inflation every day in the country, you talked about commercial white paper, government bonds and stuff like that. Right. I get that every day, information on that. But I want you to help us. What is the hope of when you buy government bonds, sometimes you see 15% for 5 years, 17% for 10 years, and it looks good, but when you consider the number of years, you'll be like, if I had this money with me and I do business in 2-3 months, I can get this money that government is going to give me in 5 or 10 years. So I told some people like they're not interested because the profit is not much. So what is the hope of buying bonds when the naira is gradually falling? My question, sir.
Thank you very much for calling. 0700-923-923-923, or you can send a message to 0817-313-6193. And Femi, there's a message here for you as well. I'm sure you have to take two of them together. This person said, good evening, Smart and Mr. Femi. Thank you for the explanation, Mr. Femi. So this is a lot of education coming. You didn't say your name there. Okay, this is Chioma. Thank you very much, Chioma. So go ahead, Femi.
Okay, thank you very much. So, the question is quite very good because, it's basic thing that people, look around for. But you see, like I said earlier, the reason why you keep money is not just one way.
Okay, so we'll have another call. Please help us to turn down the volume on your radio. Help us to do that. Hello, good evening.
It's low.
Thank you. Good evening to you.
Good evening, Captain Smart.
Thank you. Your name, sir. Where are you calling us
from?
Good
evening, Mr. Femi. This is Sam from Surulere.
Welcome, Sam.
Yeah, just like the last caller said, it's very difficult right now to really invest in some of these things that you talked about, like bond and all that. Because you will agree with me that an investment of 1 million last year is not worth that amount now. When you convert it to dollars, it will mean less or nothing. It is better you have your money. Maybe if you have it on goods, as things are appreciating, maybe your goods will appreciate. And thank God that when you are saying you say put your money in savings in financial institution, you made mention that you're not talking about bank. Because these days, I used to know when you have a savings account, no matter how small, at the end of the month, you have something in your savings account. But these days, they will take from you and they will call it savings account. I don't understand what that is. Thank you.
Okay, sir. Thank you very much. Right. Somebody said the banks make sure that you're not a millionaire. If your money is 1 million, they will put 25 kobo. So it reduces it stops you from being a millionaire.
Interesting. Anyway, good questions and comments from everybody. That's very good. Like I said earlier, I told you that there are different motives for keeping money. It cannot be one-sided. And also in CFA, we are taught about something they call asset allocation. You cannot put all your eggs in one basket. Yeah, you're a businessman and you can buy goods you think you appreciate. No problem about that. But the fact remains that even business life cycle is not the same. It's not smooth. Government economy life cycle is not. That's why we have the period of recession, the period of boom, the period of recovery, stuff like that. So the same thing happens to your business as well. At times business are down. That even the goods that you bought at an expensive price, you have to sell it at anything just to make money, to make wealth. So for that purpose, you have to separate them. Now, you must be able to keep money for transaction purpose for a businessman, no problem. But you must be able to set money aside for precaution. Now, if you need money urgently, your good cannot turn to cash immediately. It doesn't work that way. And then you need cash. So you must have cash reserve somewhere that you can pull to sort out stuff when you need it. Now, other investment too. You are importing, say, tiles and you are selling tiles. What happens if demand for tiles just slowed down for some reasons? What's going to happen? So you have to be able to do some other businesses as well. So that's the idea of saying do some other things as well. Now, when I said financial institution, I did not say only banks. I didn't say don't put money in banks. No, I said not only banks. That you can do some other things as well. And I explained even the opportunity in mutual funds. When I said collective investment scheme make you get better. Because if you put money together and the money is sizable, you're able to get the bank to listen to you better than when you go with your 1 million or 2 million naira. Now, somebody talk about bond and commercial paper and asking about inflation rate. You are right, absolutely. And that is why even what you see is that as we speak now, most people are raising CP rather than doing bond. Because they don't want to key themselves into long-term rates that might not be good for their businesses. So they're doing the short-term, and the rate is not bad because it is very close to inflation. Again, let me say this. Inflation everywhere in the world, high inflation is not good for anybody. Not good for business, not good for the economy or anything. So everybody work toward trending it down. And the idea is always that in the future, inflation rate will always go down. It's trend down. So the yield curve is always, pointing down. Inverted yield curve. Inverted curve for inflation. So what I mean is that today, I cannot be pricing a bond of 10 years with today's rate. Because inflation will go down in the future. I will have stuck myself with the high rate at the moment. And that's why you see people say, 15%. This percent, and you're like, inflation is 26 today. Yes.
Okay, we'll have another caller. Hello, good evening.
Good evening.
Thank you so much for calling. Tell us your name and where you're calling from.
Yeah, my name is Chris, calling from Ikoyi presently. Okay,
Chris, talk to us quickly.
No, sir, I just wanted to clarify that, and the last caller now that said if you have money in your savings account, the bank takes from you. But that's not true. If you have 1 million and save it for 1 month, the bank will add about 15 to 13,000. So I've experienced it. I don't know if you've actually experienced it though.
Okay.
Thank you.
All right. Thank you very much for the testimony.
Yeah. So
in defense of the banks.
I think we need to just clarify that.
Yes.
You see, putting money in the bank and putting in a savings, they are two different things. If you want to save money, you might have to sit down and talk to the bank about putting in a deposit account.
Yeah.
Or a proper savings account. And let me warn, savings account is savings account. You must be disciplined to keep the money there. If you don't keep the money there, you keep withdrawing. Once you withdraw by some number of period in a month, you lose the interest for that month. So that's what some people don't know. And when you put the money in the current account, it does not yield any interest. Because what that means is that I can demand it at any time. And that's why they used to call it demand deposit.
Yeah.
You can demand at any time. So for demand at any time, the bank, they are not able to also invest the money. Because if you demand for it, they must make the money available. Or else they have to sell something at a loss. So for that, they don't pay you interest on that. But for your savings, and you must be disciplined too. If you do it every now and then doesn't pay them, they are not able to use their money. Okay. But if you sit down to say, okay, 30 days, 60 days, 90 days, they are able to give you money.
Good evening, welcome. Oh, we lost the call there. You can call us back, and we'll have a message here. This person says, my name is Ify. I am sending this message from New Jersey in the US. With the fluctuations in the naira against the dollar, what encouragement is there to invest in Nigeria, our country?
Thank you very much. Good question. But so the point about this is that, look, we have to separate both things. Because as we speak now, there's fluctuation in India rupee, there's fluctuation in Russia ruble, there's fluctuation in some other countries. The point about it is that you have to deal with each person the way it is. You cannot be working in Nigeria and be spending dollars. It doesn't just make sense. That's the point. The reality is that, and I kept telling my people that want to invest, if you want to invest in Nigeria, just take the money from Nigerian investment to sort out Nigerian issues, Nigerian expenses, and Nigerian needs. When you start converting it back to dollars, it will be a problem. It's like traveling abroad and they give you, okay, this is how much dollar something is worth. Compare it to naira, you will not buy anything. People pay rent of $2,000, $5,000 in Manhattan for one studio room. Have you considered that as well? So the fact remains that Nigeria is Nigeria and US is US. If you have money, set it aside. Okay, this one will be for Nigeria investment. This one will be for dollar investment. Even in Nigeria, there can be dollar opportunity, sovereign bond, that government, Euro bonds for corporate and everything. But we don't even want that to be, because it's just like dollarizing the economy in a way. So I think we should separate that. Let's focus on the fact that this is Nigeria, and their instrument that we can buy and sort us out in Nigeria. Part of the issue we're having with fluctuations because we depend too much on imports, too much on the dollar. I think, I will beg, let's not focus too much on dollar. Let's strengthen our naira, and then we'll be happier with it.
She's in the US. She wants to invest money home.
No problem about that. That's what I'm saying, that it has to be separated. The money for home should be the money you know that you need at home. If you start thinking of converting back to dollar in future, it might be a problem. Because there's always that. Even if you put the money in Russia ruble, devaluation can happen to it. If you put it in Chinese renminbi, the same thing could happen. So Nigeria and abroad, when you want to invest money, you have expenses at home. Set out that dollars, convert it to naira, invest in local investment. Whatever you get from it is to take care of Nigeria expenses. Forget US.
Femi, because of time, because we're already at the end of the program, we just lump these two questions together. Good. Are there shortcuts to investing or one has to just follow a process. It's a ladder. Let's just climb step by step, to achieve the meaningful results that you have here. And then the issue of some people believing in gambling, maybe to get rich quick, like today there's Tottenham and Chelsea. They say go, Tottenham to score first. A lot of money can come out from there. Just without mentioning any betting brands. What's your view? Just in 1 minute and a half.
But yes, you're right. There's no shortcut to investing. You must do things appropriately and properly. And I must say that we have seen so many pyramid scheme and all sorts in Nigeria. We have seen that it doesn't really end up well eventually. So when it comes to investing, it's better to follow the process. Research well. Be sure that it fits into you. For example, now it was when we have plenty money that can be doing too many, highly speculative investment, because investment is speculation. The reality is because we don't know what happened, in the real sense. You don't know what's going to happen tomorrow.
Some people don't even have the money. They take all their life savings and put it there.
I'm coming to that one. Gambling is not totally bad in the real sense of it. If you check the definition of gambling, it actually means that you are investing in you are making risky bets.
Wow.
Right? However, you need to think about it properly before you do it. Because there are only two ways in gambling, unlike investment. It's either good
or bad.
No middle point. It's like going to fly, to jump into the lagoon. And it's either I float or I sink. That's the way it is. So it doesn't make sense that the little money you have, you just put it in the gambling and hoping that something. So the idea of gambling, the difference between them and normal speculation is the fact that as you are going in there, you know that is either I lose this money totally, it doubles. That's the problem. So it doesn't make sense, because at the end of the day, you lose everything. And most of the time, people lose everything. And that's why it looks like, because investors are actually loss averse. They are not risk averse, they are loss averse. They don't want to make losses. Therefore, they keep on getting the risk. But this one, you are going there with your eyes closed. So they bet. Rich men do betting, but that's because they have plenty of money.
Yeah.
So you can set some aside to say, let's play with this.
If I lose, I lose.
I lose. It doesn't kill me. But you that you have small money, hey, why do you want to kill yourself? Because that's what the bundling is about.
You put it there, sleep cut.
Everything go.
And you develop high BP.
Exactly. So it is not a good way of investing. Not at all.
Wow. This is one of those episodes that you have to bring Femi Ademola back. You just have to do that. This one is a Captain Smart. I want to disagree with the last caller, because the banks will reduce your money through electronic charge, ATM card, maintenance, and SMS. I prefer to keep my money with a popular fintech or piggy bank. I get good interest there. James Obona, you sent us a message. Unfortunately, that's all we have time to take on this edition of the program. Femi Ademola, thank you very much for coming today. Femi Ademola is the Group Executive Director with Cordros Capital Limited. It's a financial services company based here in Lagos, Nigeria. Femi Ademola, thank you so much for your time this evening.
Thank you. Thank you for having me.
We appreciate you. You're such a good lecturer. Join us again next Monday for a fresh package of Money Talks. Smart Uzechi is my name.